A day after hope of an early resolution on trade lifted stocks, uncertainty creeps in again, dragging equities lower. Utilities and industrial slip while IT and healthcare eke out gains. Promoter entity Indian Continental Investment has offloaded a small 0.8% slice of its 2.47% stake in flagship Bharti Airtel for over 9,000 crore rupees. The transaction follows the sale of small lots adding up to 2% since November last year. AU Small Finance Bank gets RBI's approval to transition to a universal bank in the first such approval in 10 years. The license offers greater flexibility in business and eases capital requirements, giving profitability a fillip. LIC and Max Life Insurance post strong numbers, beating estimates on value of new business and new business margins. The stocks perk up. Gold prices jump on COMEX after Trump imposes tariffs on import of 1 kg gold bars, the most traded lot on the bourse. Cryptos too get a boost with Trump allowing 401k retirement plans to invest in them. Hello and welcome to Business Lunch live from the CNBC TV18 Motilal Oswal studio. I am Vamakshi Thoria and let's take a look at what the markets are doing at this point of time. It's a red-looking screen. The Nifty for now is trading with a cut of almost 150 points. The mid-cap index also dealing under quite a bit of pressure. It's down almost 1%, and the advanced decline ratio does reflect that. The advanced decline ratio largely in favor of the declines. Now, as far as sectoral indices are concerned, we only have two sectoral indices which are in the green. We've seen some recovery come in on Nifty Energy, but Nifty Media is the one that is taking the cake today. Saregama, Network 18 are some of the counters that are doing quite well. But on the flip side, it's the metal names that are taking a very big hit in today's trading session. Nifty Metal is down almost 1.5%, and Nifty Realty as well trading under pressure. But apart from that, there are a lot of stocks that are moving around in trade. Take a look at some of the new listings like NSDL. That stock last I checked was up almost 17%, and this is after reporting a 20% jump yesterday. Apart from that, take a look at M&B Engineering as well. It had a tepid listing, but the stock has picked up momentum. See that, there you go. NSDL up almost 17%, and M&B Engineering is the other one that I'm talking about. It's a new listing as well, and that stock too is gaining momentum in trade today. But moving on then, let's get started with the show. And US President Donald Trump has said that there will be no trade negotiations with India until the dispute over tariffs is resolved, following his administration's decision to double down on tariffs in India. Listen in.
Do you expect increased trade negotiations, since you've announced the 50% tariff?
No, not until we get it resolved.
And in a bid to strengthen ties amid Trump's trade threats, Brazil's President Lula da Silva dials Prime Minister Narendra Modi. Remember, this comes as both countries get hit with the highest tariff rates from the US at 50%. The two leaders agree to enhance cooperation in trade, technology, energy, defense, agriculture, health, and people-to-people ties. They also exchanged views on regional and global issues of mutual interest. Well, separately, Brazilian president also said that he saw no room for direct talks with Trump as US tariffs of 50% on Brazilian exports took effect. In an interview from his presidential residence in Brasilia, he said, and I quote, "My intuition says that Trump doesn't want to talk, and I'm not going to humiliate myself." The leader also said that Brazil is not about to announce reciprocal tariffs. Well, earlier today, we also spoke to Sivaramakrishnan Ganpati, who's the Vice Chairman and MD at Gokaldas Exports, to assess the impact of Trump's tariffs on the textile sector. The management in their Q1 con call said that tariffs will likely impact the volumes in the second half of the year. Let's listen in to what he had to say.
20% is the minimum tariff on most of the large apparel manufacturing nations. So 20 is the new zero in many ways. And 25 was just 5% above. We could have handled it. But an additional 25% is something which we are, watching. We are seeing, how long is this going to be before some normalcy could come in. For Q2, those orders were placed long back, so I don't see any problem as far as Q2 business is concerned. For Q3, those discussions are yet to begin. So we have not seen any customer cancel any order so far, but discussions are on as to how do we deal with it, and it will play over the next 2 weeks, I think, for Q3. As far as the burden share for 25% is concerned, it's also speculative. As I said, our net profit margins are in single digits, net profit margin. So there is a limited room for us to absorb. I think the rest of it will have to be absorbed by the others in the supply chain, including the retailer.
Well, that was the management of Gokaldas Exports. Keep in mind the stock has taken a hard knock ever since the tariff talks had been announced. But let's hear what Timothy Mole of Goldman Sachs had to say on how the markets is reacting to Trump's 100% tariffs on chips and his take on India's total tariff rate, which is at 50%.
First, there's been a great deal of uncertainty about the tariff environment for reasons I think which are pretty clear. The fact that we actually have hard numbers, maybe there's need some fine tuning, as Lynn was just mentioning, but they're hard numbers pretty much across the board, means that the uncertainty level has diminished. And you can quantify that with publicly available economic policy uncertainty indices. The market really, I think, is wanting clarity, not just the market, but actual manufacturers. Because in an environment where you don't know what the rules of the game are, it's very hard to commit capital and make investment decisions. And that's especially true for the very large, big ticket investments, such as is the case for semiconductors. Our economists have quantified the risk here that if the full 50% tariffs are implemented, then that could mean an additional 0.3% downside to our GDP forecasts. And we've tried to quantify that in terms of the risk to earnings, which could be in the order of 2-3%, perhaps a bit more, to our MSCI India earnings forecasts against a baseline expectation of 11-12% growth this year. So I think that the Indian market, which is expensively valued, still at 22 to 23 times forward earnings, now faces an additional headwind, and I think that supports our somewhat less immediately positive view on the market, where we're market weight as opposed to overweight China, Japan, and Korea.
Well, moving on then, the Supreme Court is expected to hear GSW as well as Bhushan Power and Steel insolvency case today. Ashmit is here with more details on this. Ashmit, what are you picking up?
Well, this case has been a complete roller coaster ride as far as JSW is concerned. Bear in mind that in the month of May, the resolution plan was scrapped, a huge setback for them. And then just last week, we had a recall of the Supreme Court judgment. The Supreme Court recalling its judgment came as a big relief. And just as JSW Steel was about to heave a sigh of relief, now we understand that the banks have come back with a curveball. They've thrown a curveball, a fresh turn in this roller coaster ride. They've changed their position on two critical issues. Number one, bankers, the COC, the lenders are now seeking the EBITDA for the period of the company was under insolvency. This was a dramatic shift in position as of May 2025. The lenders had been saying that they're comfortable with this EBITDA money staying with the corporate debtor, which happens to be Bhushan Power and Steel. Now, they're saying that there is commercial wisdom that has prevailed on the bankers. They're changing their stance. They're aware of it. And they're going on to say that they want to avoid unjust enrichment, basically saying that JSW Steel, when they come on board with the resolution plan, will be coming on board with their 19,000 crores, as well as the EBITDA for the period that the company was under insolvency. That's only one, however. There's a second curveball. The second curveball is the lenders are now saying that in an admitted departure from their earlier stance, they now want an interest to be paid to them for the delay that has been caused in the implementation of the resolution plan. They want that interest bill to be also footed by JSW Steel. So again, two strong curveballs coming JSW's way, a fresh challenge that they'll have to address when they begin arguments. We understand the arguments will begin shortly at 2 p.m. today in the Supreme Court.
Well, thank you so much for that, Ashmit, and we'll come back to you for more details as well. But moving on then, the Union Cabinet meeting is underway and sources say a proposal to compensate state-owned oil marketing companies for losses incurred on the sale of liquefied petroleum gas could be considered. Now, in the same meeting, the Cabinet is also likely to approve the subsidy payout under the Pradhan Mantri Ujjwala Yojana, which is a flagship welfare scheme aimed at providing subsidized cooking gas to low-income households. Well, moving on then, Ria is now joining us with some of the top stocks that are buzzing around in trade today. Ria, I'm sure it's a long list.
Well, yes, ma'am, actually a long list indeed, and all on the back of their quarter 1 numbers. First, taking a look at LIC, this one is up around 4% after beating estimates for quarter 1 numbers. New business premium has gone up by around 5% on a year-on-year basis, and the VNB margins have also expanded by 146 basis points, coming in at 15.37% in this quarter. For Biocon, on the flip side, this one is down by about 3% after a slight miss in its numbers. Revenue growth at around 14.8% versus estimates of 19% growth. However, margins have been strong at 19% versus just about 12% in Q1 of last year. For Schneider Electric, 5% lower circuit for this stock. The net profit has declined by around 15% on a year-on-year basis, and revenue has seen an uptick of around 5% compared to the previous year. Cummins India has seen a very strong performance in this quarter. The stock is up almost 5%. We've seen a beat across the board for this one. Revenue has seen an increase of around 26% compared to the previous year. Net profit also very strong growth of 40% compared to Q1 of last year. For GSFC, the stock is also up around 7%. Margins have expanded by around 380 basis points on a year-on-year basis. Net profit also seeing a big jump of around 51% on a year-on-year basis. Kalyan Jewellers, however, is down over 9% today, even after posting a very strong set of numbers in quarter 1. Net profit has seen an increase of around 49% over the previous year for this one. The last stock that we're keeping an eye out on is Data Patterns. This one is also down around 7% after posting a very weak set of numbers this time around. EBITDA and net profit have declined by 14% and 22% versus estimates of growth of 27% and 17%. So very weak set coming in here. Margins have also contracted by 341 basis points for Data Patterns.
Well, thank you for all of those details, Ria. But moving on, State Bank of India will report its Q1 earnings today. And what are some of the key expectations? Gaurav is joining in with all of the details. Good afternoon, Gaurav.
Well, good afternoon. When we talk about SBI's Q1 update, we are expecting good growth in terms of loan book, but at the same time muted performance in terms of earnings. So let's understand the numbers first. Loan book growth is expected to be somewhere in the range of 12% despite having the biggest loan book across banking segments, whereas deposits are likely to increase almost by 10% on a year-on-year basis. On the back of that, when we talk about net interest income, they're expected to increase almost by 1% on a year-on-year basis, although there may be a decline on a sequential basis, and that is the reason why net interest margins are also likely to decline almost by 10 basis points to around 2.9%. Now remember, earlier management had said that they will be trying to keep net interest margins around 3% level. So anything and any commentary around that is going to be a key thing to watch out for. When we move on to operating profit, now we may see 3% increase on a year-on-year basis in terms of operating profit because of the lower OPEX and at the same time higher other income. We have already seen this trend across other banks, so there is some positive bias over here. When it comes to credit cost, we may see a little bit of inch up in this quarter because agri is something which is usually weak for Q1, and as a result, profit is likely to decline almost by 2% on a year-on-year basis. Now, going ahead, any kind of commentary on net interest margins is a key thing to watch out for. Commentary on growth is also something that the market will be keenly watching out for from SBI. And lastly, commentary on the asset quality. Now remember, this is the biggest bank, and even though Q1 is behind us, we will be watching out on how the commentary is going to be from the bank going ahead, which can actually also reflect in the market itself. So definitely these three things we will be watching out for. But in terms of number, stable number is what we're expecting from SBI in this quarter.
So stable stat for SBI this time around. The stock ahead of its numbers is trading with a cut of almost 1% or so. We'll be, in fact, hearing from the management soon as well. But on that note, let's slip into a very short break. Remember to tune into the all-new CNBC TV18 Prime, bringing you insights from policymakers, business leaders, and economists shaping both the world and India's future. CNBC TV18 Prime decodes global shifts and their impact on Indian businesses, giving you unparalleled insights. Tune into CNBC TV18 Prime at 12 noon for the Global Reset, at 1 p.m. for the Big C, and the Global Lens at 8:30 p.m. Well, the Nifty 4 now is trading with a cut of almost 161 basis points, still in the red. The mid-cap end of the market also not doing too well, down almost 580 basis points. The mid-cap end of the market, of course, trading at the day's lowest point. And SBI now just reported its numbers just a short while ago. The stock is seeing a very sharp spike. The net profit has come in much above estimates at 19,160 crores as compared to a poll of 16,664 crores. More numbers will also trickle in. Keep in mind that Gaurav was highlighting that a stable set was expected to come in this time around. We'll get more details on that. And in fact, we'll also be joined by Gaurav, who will take us through the numbers. But for now, we're looking at SBI's net profit at 19,160 crores. Apart from that, let's also take a look at some other names that are also doing too well. It's KRBL also in focus. So we'll keep getting you more numbers from SBI. We also, in fact, have Prakash Diwan joining us to give us his first take on the SBI numbers. Prakash, for now, the net profit has come in much higher than what the street was anticipating at 19,160 crores. What's your first take on how the numbers have panned out?
So honestly, we'll have to wait for some more numbers to emerge, to come out for a real distinct narrative to emerge. But yeah, these numbers on first cut definitely look better than what you had penciled in. So as of now, that is positive. But what has led to this? Most times, SBI numbers are well understood once the management explains these, because there's so many moving parts to it, and then it's a bellwether, so you would rather understand a bit more detailed nuances of the improvement, and then it's easy to take a call. But yeah, on first cut, definitely very positive.
All right, Prakash, so the NII number has come in at, it'll just come up for you on the screen. It has come in at 41,070 crores odd. It's more or less in line with what the street was. In fact, it's slightly lower than what the street was expecting at 41,650 crores. So Bonangbal's definitely trickling in. Net profit up almost 15% this time around. When it comes to SBI, I think the credit growth will be an important number to watch out for this time around. What are the other factors that you'll be keeping an eye out from the management's commentary then?
So that's what I said, whether it's the NI numbers, whether it's the net profit numbers, they all look positive because of, I think, broadly a change that's happened vis-a-vis last year. And that is, SBI went through a bit of a phase of, a corrective phase of consolidation on its books, sometime in that April, May, June, and there was a setback on the agri portfolio, the MSME portfolio, which probably is what I would love to see has not kind of been repeated this year, because usually April-June quarter is weak on account of those issues, seasonality issues. But if they've been able to broad base the growth, the credit growth has come from other parts as well, then naturally your reliance on just a few sectors that are likely to not do well is less. So I would like to hear that. And in terms of cost of funds, and they've just recently kind of raised capital as well. In terms of cost of funds, if they've been able to keep that under a lid, even in the elevated interest rate regime, that would have kind of paid off somewhere. So we'll and then that's going to help everybody else as well going forward, because cost is coming down. SBI is probably the largest in terms of benefiting from softer FT rates and all of that. So we'll wait to see these 2-3 things and then kind of build some sort of anticipation for the quarters ahead.
Well, absolutely. Thank you so much for that, Prakash. But we also have Ikta joining in. Ikta, is there something you'd like to ask Prakash?
Well, yes, absolutely. Just wanted to touch base in terms of the SBI numbers. The NII, as expected, is absolutely flat this time round. But what has stood out is the profit is up 12.5% on a year-on-year basis as compared to an expectation of a subdued profit. So that actually stands out, and that would be interesting to see what exactly has resulted in that. And one of the key parameters is the other income, which is higher this time round. So that has definitely aided the profits. And the provisions. The provisions same time last year was around 3,449 crores. So maybe we can pull up the provisions figure to figure out whether or not there are lesser provisions this time, which is really aided. So as you can see, the net profit is up around 15% in terms of a total this time round on a year-on-year basis. But Prakash, I just wanted to before that, in fact, we have Ashutosh Mishra, who is joining in from Ashika Stock Broking to give us his perspective on the numbers as well. Ashutosh, thanks very much for taking the time out.
Thank you.
What is your sense in terms of the bottom line that we've seen for State Bank of India? Other income higher, provisions we're just waiting by in terms of the numbers.
Yeah. So we have in this quarter, we have seen the bank has given a positive surprise on treasury profits front. So SBI, also having access treasury holding. So definitely that profit has flown to the SBI also. And apart from that, provision also we are seeing that some positive surprises there in provision part. What is important is to look at the loan growth, and that is very important for SBI going forward from here. So what the loan growth will be the most important part for me from here on.
What is your expectation in terms of advances this time? Because FY25, credit growth was probably a shade below the guidance of around 14 to 16%. What is your sense in terms of what they could do in terms of advances this quarter, and how are you extrapolating it for the year as well?
We are taking roughly 14.5% growth in advances, and they have raised the capital. So given the buoyancy which we are expecting in our whole capex as well as retail MSME part, also, we are expecting the growth will be quite good for this year. Till now, it has not happened. So that will be the key monitorable across the banks. And that the reason for that is that we are going to see NIMS compression across the banking sector. So profitability growth will only come to the banks which are able to deliver healthy performance on loan growth along with managing the cost in the best possible way. And that's why loan growth become very important parameter to look at.
Okay, all right. So you said that 14% is your estimate for the quarter, for the year?
For the year.
For the year. And for the quarter?
Yeah. It is 1.6%. First quarter is normally soft in the terms of loan growth.
Okay. Prakash, what's your estimate in terms of advances this time for SBI?
So I honestly, it's difficult to put a number. The estimates that we are looking at doing is it's more of the overall credit growth in the system, and SBI could probably do about 200 basis points better than that. So right now the credit growth in the entire system is just about 8.59. So SBI should be in that 11% odd zone. But, that's what I think one point that Ashutosh also mentioned, just want to reiterate that. Credit growth is also a function of the cost of funds that you can manage. And SBI probably stands a better chance than all the other banks on that count. So we've seen corporate loans being where they are, but it's the combination of MSME and large corporate loans which will probably help SBI outperform the industry. So let's wait for the commentary to give some sort of a semblance on this.
Absolutely. And I think the commentary would be crucial in terms of the asset quality as well, because the gross NPA and the net NPA on as of now don't seem to have any sort of huge change on a sequential basis. They're quite stable even in terms of the ratios. It stands at around 1.83 versus 1.82. So no real big surprises which have come in terms of the gross NPA as well as the net NPA. That would be crucial in terms of commentary. Just on that point, Ashutosh, wanted to bring you in terms of asset quality. What are you expecting in terms of, say, any kind of surprises from larger, chunkier accounts as well as smaller accounts this time?
Normally, first quarter, they witness a higher slippages from the agriculture and MSME part of it. And banking sector has also witnessed a similar type of thing. So sequential increase in slippages may be there, but that is not to worry any sign. This is a seasonal phenomena which we have seen in a multiple year SBI doing in first quarter some stress recognition and which get corrected in the subsequent quarter.
Okay, Prakash, quickly then, the press conference is going to be in half an hour from now. Expectations and what should we keenly hear in terms of SBI management?
So, it's, I think the most awaited parameter, while it's loan growth, advances growth, it's the mechanics of how they are going to be bringing this growth in and any kind of a asset liability mismatch that they're able to cover, because this is the cusp of the interest rate coming down. So transmission is a challenge and you still can't reduce borrowing costs very, very quickly. So how do they manage that is what I will be very happy to hear. And then, of course, growth is a function of the overall economic cycle. But if they're ready for it, then they stand a better chance to get allocations from investors. So that's what I would like to hear.
Okay, all right, Prakash as well as Ashutosh. I'm sure the devil really lies in the details, but as of now, SPI is just about lower by around 1.4%. NII absolutely flat, profit better than expectations. Other income has aided in terms of profit this time. Gross NPA, net NPA ratios absolutely flat and maintained. We'll wait by for details such as advances as well as what they do in terms of asset quality. Vamakshi, over to you.
Well, thank you so much for that, Ekta. You know, SBI definitely saw a small spike after the company reported its numbers, but for now, down and out in trade today. But with that, that's all the action we have on this edition of Business Lunch. Don't go anywhere. Midcap Radar comes up next.